Okay, we are live now. Good morning, everyone. Thank you for joining us on this Sunday afternoon. We have with us the next session for Tinkerpreneur 2022. This session will be on business finance and will be conducted by Mr. Karthik, uh, who comes with a lot of experience. He is currently on board of Robotic Solutions and intelligent automation company. Along with that, he runs his own company, which helps other startups uh, designing their strategies. Also, he helps the government agencies in handling corporate crimes and money laundering matters. So you can see that we have a person who have with wide experience, and you guys can learn a lot from him. So not taking much more time, I hand it over to Mr. Karthik. Uh, Hello, welcome, Mr. Karthik. Please, you can.
Yeah, hi Pratik. Thanks a lot. Thanks for the introduction. Hi everyone. It's a pleasure to take a session through AAM. I thank AAM as well as iVenture for providing this opportunity. Uh, so the topic that we are going to discuss today is on the business finance. So I hope my screen is visible to everyone.
Yeah, it is visible.
Fine. Yeah. So to start with, why do we do business? So to generate value. And if you are generating value, what do you need? What do you mean by generating value? So you basically solve the problems for the customers by building your own products or services, and you help in profit maximization. Now, what is profit maximization? You help in incremental revenue. You just try to bring down the cost to the optimal level and ensure that there is a continuous growth. And then the next expectation is on the wealth maximization. So wealth maximization is a bit different from profit maximization. Here you try to build the wealth of your stakeholders. Who are your stakeholders? People who uh, hold shares of your company, people who are the actual owners of your entity. And then why do we do business is to just survive, right? So you keep uh, earning, and you also diversify your investments into multiple businesses, and you just ensure there is a smooth running of your business and ensure that you survive on a long term. And then for innovation, in order to survive, you'll have to continuously innovate. You need to put some of your investments in research and development and continuously work on yourself to meet to the changing needs. And then the social part of it, we generate values, we generate employments to a lot of people. We address the demand and supply gap in the market, and we ensure that we don't just earn profits, but we also generate value to the society. So these are all some of the basic objectives of carrying out a business. And then now getting into the finance. So how to understand the numbers. So I hope you guys would have already known certain things, but then majorly all the transactions needs to get accounted. So when we say accounted, what is accounting? So there is a detailed concept, but to keep it short, it's basically the art of recording, classifying, and summarizing in a significant manner, and in terms of money, transactions, and events, which are in part, at least, of financial character, and interpreting the results thereof. So this is defined by AECPA. And once the business transactions are accounted, basically all these recorded information needs to be analyzed, right? So in order to take a decision, we need to analyze whatever transactions and the numbers related to such transactions makes meaning to it. So you get to you do all your analysis, you do your research so that you survive in your future. So this is the bigger part of the analysis is what we are going to speak about in the business finance. And there are certain differences between what is accounting and finance. So an accountant concentrates on the preparation of the financial statements using which you analyze for the purpose of decision making. And the viewpoint of accounting is more backward. So whatever transactions that happened in the past, you do the analysis and then you analyze so that you take decisions for the future. And then the focus is more on the accuracy and reliability while preparing the records. And the business finance is more on the insights and analysis. And the business purpose is to communicate the financial position. And whereas in finance, it's figuring out how to add value using the financial information. So, done with the theories, let's get into understanding the numbers. So, this is more a concept of cartoon based storytelling. And this is, let's say, we will be learning all these things through multiple illustrations, and be careful while mentioning any terms. So I will be taking you through term by term for different transactions. Please take note of what is the kind of transactions that is happening and what is the terminology that has been used. So let's start with illustration one. uh, our Tintin, one of the cartoon characters. So this guy has runs his own restaurant and goes to the market, buys some vegetables, flours, and rice from the market. He buys everything for 50 rupees, and now he appoints Motu Patlu, the chef, and asks to cook the food and pays him rupees 15. And Tintin pays rent, electricity, gas bill, whatnot. So all the expenses related to such cooking. And he again spends 15 rupees. Now Tintin wants to earn 20 rupees from his business. Now he has a customer, Captain Haddock, and his team feels hungry and wants to buy all the food from Tintin. How much should Tintin charge? So now we get into the concepts in detail. So Tintin goes and buys the food supplies, right? So from whom does he buy? These are the people called suppliers. So suppliers are the one who are selling the vegetables, flours, and rice in the market. Tintin goes, buys the material from suppliers, and he comes back, hands it over to his Motu Patlu. So who are these guys? They are the cooks. So they need to process the food, and for which they will be expecting some income. And how will Tintin pay them? He will be paying them as salaries and wages, because these guys are employees and workers. And then there are other expenses which are related to rent, electricity, and gas. So these are the expenses which Tintin is incurring, which is 50 rupees plus 15 rupees on salary and other expenses of 15. So the total cost comes out to 80. And now Tintin wants to earn 20 rupees profit. And how much he will charge? He will be charging cost plus profit, which is the selling price, 100 rupees. And who is his customer? Customers are the one who is going to buy the material from you. So here it is Captain Haddock who is going to buy the food for 100. So here the entire scenario is being captured in this format. So raw material plus salary and other expenses gives you the cost. And from cost, you add profit and you sell the material at 100. And now let's try to learn about profit maximization. How can we make Tintin earn more profit? So now let's say Tintin wants to earn 30 rupees. Earlier he was earning 20 rupees. Now he wants to earn 30 rupees. So how much he should charge now to the customer? Already we know that the cost is 80. Now he wants to earn 30 rupees profit. So you'll have to increase the profit, correct? Increase the profit from 20 to 30. And then you will have to also increase the selling price, correct? So earlier the cost, so selling price was 100. Now you will have to sell it at a higher rate. Let's see how much you will have to charge. Now he will have to charge 110 rupees as a sales price, because there is a profit added to it. And how do you increase your profit margin? You increase the selling price and you also increase the profit margin. This is one of the ways in which you can earn more profit. Then let's try to understand on the wealth maximization part. How can Tintin generate more wealth? So let's again get into a story. Tintin makes profit of rupees 100 per day, and for past 50 days, and he has accumulated almost 5,000 rupees. And he has kept this 5,000 in his pocket and not knowing what to do with it. And on the other hand, Harry Potter, who is his, stays in the next town, he also started the same business during the same time frame when Tintin had started. But now Harry Potter had doubled his revenue, and he has another hotel, restaurant. So he initially had 100 was earning 100 rupees per day. Now Harry Potter is earning 200 rupees per day, and he has become the richest person in the state. And Tintin is confused. He doesn't know how it happened. For where did he lose? So what should Tintin do? Tintin should have also done similar to Harry Potter. What did Harry Potter do? He invested his profits in building a new hotel. And now Tintin has just kept his money in his pocket. He has not used at all. So what should Tintin do? He should also go and invest in new hotels or get into some other business, or probably he can invest in financial market. So reinvesting your profits is one of the key ideas which we are learning in this concept. And then let's get into the another illustration. Now Tintin wants to buy a restaurant building from the owner and needs 10,000 rupees today. But Tintin has only 5,000 rupees savings in hand. He currently earns 500 per day from sales with a profit of 100 rupees per day. How should Tintin finance his requirements of rupees 10,000 to be paid today? I'll give you few seconds for you to understand. So basically, he wants to buy a restaurant. So similar to Harry Potter, he already have 5,000 rupees savings, and he's generating a profit of 100 rupees every day. And he has to pay 10,000 rupees to the owner today. So how will he pay? He has only 5,000 rupees, but he needs to pay 10,000 rupees. So what can he do? He can go to a third party and ask for money, right? So there are multiple parties from whom you can get money. So one is the bank. There are some fund houses like investment banks, private equities. You reach out to these people, they will help you in getting money. Or probably you know a very rich man, a high net worth individual, reach out to them. Probably they might be interested in uh, investing in your idea. So what is the need? The need here is 10,000 rupees, and you have only 5,000. The balance 5,000, you get it from another person. How will that person give you? He will either give you in form of equity, or he will give you in form of debt. Now, what is this equity and debt? I know. So equity is something which, it gives a share in your company's business and share your profits throughout the business life. Whereas when you go to debt, you just take the money for a short period, or even for a long period, 1 or 2 years, few years maybe, and pay back it as a loan with a few component of interest. So let's try to understand this equity and the debt concept with some examples. So what is debt? Let's say there are two friends in a school, Krishna and Beam, studying in the same class. One day, Krishna didn't have a pen to write. So, what will Krishna do? He will ask the person who's sitting next to him, Beam, "Hey, Beam, can you please give me a pen to write?" Now, after using for the day, Krishna will give back the pen to Beam, correct? So, he's taking the pen from Beam, he's giving back the pen to Beam. So, this is something similar to the borrowing concept. So you take it and you give it back, right? The next thing is equity. Now, Krishna and Beam study in the same class. And again, Krishna didn't have a pen to write. Now, he asks Beam for a pen. But Beam has only one pen for himself and he doesn't have a pen to give it to Krishna. Now, what will Krishna do? If he's not submitting his papers, then he will have to get scolding from his teacher. So now Bhima and Krishna decided to go and buy a new pen. And there is only 10 rupees pen which is available in the shop. And Bhima is having only 5 rupees in his hand. Krishna is also having only 5 rupees in his hand. So both of them together, they are buying a new pen for 10 rupees. Now comes the problem. Who is the owner of the pen now? Is it Krishna or is it Beam? Krishna is the one who is going to use the pen, but Beam has also paid 5 rupees for the same pen, correct? Now, though the user is only Krishna, since Beam has also paid 5 rupees for the pen, both of them are the owners, right? So both of them share the pen at 50-50 percentage. So this is the concept of equity. So you bring in a person who funds you, you share your business with him. They will be getting a certain stake in your company, and they will also share the ownership of the entity. And when it comes to debt, you will continue to be the only owner and you give it back. When it comes to equity, you share your ownership with another person. This is the debt and the equity concept. Now, let's get to know a theory. It's called pecking order theory. So basically, what is that we learned here? You first used your own money, correct? You first used your own money, which is your savings. You already had 5,000 rupees in your hand. First, you put that 5,000 rupees for buying the restaurant, correct? Then only for the balance 5,000, you go out to the third party, right? So this is what this theory talks about. Basically, use your money, which you already have for the purpose of business. Then go out and ask for a loan, borrow. If not, then go to the equity. So go to this, approach funding in step by step approach. So first you use your own savings, then you go out and ask money from someone in form of debt, and then you share your business with someone and raise the money in form of equity. So this is the theory, and it is a theory's name is pecking order theory. And then let's try to understand about survival. So how do you survive in your business, right? So basically you need to know how to handle your money inflow as well as your outflow. So let's now try to understand this concept. I have mentioned each and every term in red. I have highlighted it. Please take note of it. So uh, Tintin needs rupees 80 every day to operate his business, and Haddock's team are only customers with everyday sale of rupees 100. Let's assume that the transaction happens, but no one pays the money. The food sold to Haddock's team is, every day he's selling for 100 rupees. And the expense that he's incurring is 80 rupees. And what is the profit every day? It's 20. Let's say these transactions are happening, but there is no uh, movement of money from one hand to the other. So Haddock is coming, just eating and going. He's not paying you. And you are going to the market, just buying the vegetables without paying the money to them. So what happens? You're basically liable to pay back that money. And similarly, Haddock is also liable to pay you back the money. So when whatever sale that you do, right, for which you have not received the money, so the event has occurred, right? So you had Haddock has come, Haddock and his team has already eaten the food on day one and day two and day three. So if they continue to eat without making the payment, what happens? It becomes an income receivable, right? So he will have to pay that money in future, right? Similarly, you are going to the market, you are buying vegetables every day for 80 rupees, but if you are not making the payment, what is happening? You are getting the material in your hand, but you are not paying. But every day it keeps on accumulating, correct? So it is the expense payable to the vendor. So vendor is the person who's in the market who's selling the material for you. So he should also be paid. No one is going to give you anything for free, right? So when you will have to receive the money from someone, but the event has occurred, that is income receivable. When you had bought something from someone and you have not paid them back, so that is the expense payable. And now the other concept is the profit. And every day the profit keeps accumulating, right? But it will be only in the books and not in hand. So in cash, you will not have that money. So now let's try to understand how the cash works. Haddock settles his food bill once in 3 days. So first day he does not pay, second day he does not pay. Only on the third day he pays 300 rupees for all the 3 days put together. So first day 100 plus second day 100 plus third day 100, which is 300 rupees is the receipt from Haddock in your cash book. Similarly, day 4, day 5, day 6. So fourth day you don't get any money, fifth day you don't get any money, sixth day again Haddock comes here. Here is your 300 rupees, right? So you are getting your money once in 3 days, and only on the third day you get actual cash receipt. Let's assume expenses of 80 rupees you are paying daily. Every day you are paying 80 rupees for buying the food product from the supplier. Now what is happening? There is no income at all, right? So you are not earning the cash, but you are giving the food free for Haddock. So you are incurring an expense of 80 rupees. What is happening? There is no income, only expense is there. What will happen to your cash position? You will always be in the negative position, right? So your cash balance at the end of the day, it will be negative. Day one, day two, it will be negative because there is no inflow of money at all. On day three, there will be a inflow of 300 rupees. Now what will happen? 300 minus 160, which is the accumulated cash balance of previous day. 300 minus 160 minus the current day's expenditure, correct? So which is 60, right? That will be the net position, correct? Next, day 4, day 5, and day 6. The event is similar. So again, you will be spending the money, but you will not get back the money from Haddock on day 4 and day 5. Only on day 6, you can recognize your cash profit, which is 120. So on day 3, your cash balance will be positive. On day 6, your cash balance will be positive. But rest of the days, your cash balance will be negative because Haddock is paying the money only on the third day and the sixth day. Now, let's try to get to the next step. Now, let's say you are also not making the payment on day 1, day 2. Why you are not making the payment on day 1 and day 2? Because your cash position is getting negative. If Haddock is paying only on the third day, but you are daily paying money, who will give you money? 80 rupees on the first day, and second day you need another 80 rupees. You will also not have any money in your hand to pay, correct? Because you are earning only on the third day. So now what you can probably do, you can adjust your payment mechanism, correct? So people can buy but then pay later. So you pay within the next 3 days. On the third day, you make the payment to the vendor who is supplying you vegetables. So day 1, 80, day 2, 80, and day 3, 80. So every third day, you make a payment to the person from whom you are buying vegetables and flowers. Now, what would be the cash position? Rest of the days, there is no inflow and outflow at all, right? Only on the third day, there will be a net cash position with a positive 60 rupees. And similarly, day 4 and day 5, the events will be happening, right? So the events will continue to happen. Haddock's team will come, eat and go. You go to the store, buy the vegetables and come. Every day these events happens. But in form of money, it happens only in the third day. Cash payment for the purpose of events occurs only on the third day. So that will become a cash positive on day 3 and day 6. Rest of the days, cash position will continue to remain the same. Next, on the same, there are two things which we need to understand. One is the cash book, cash position. So this is the currency in hand which is going in and coming out. And the other side, it is the accounting book balance. What did we read about accounting? Accounting is every day's transaction gets recorded somewhere, correct? So how it gets recorded? It gets recorded as income receivable, expense payable. So income receivable is what? Every day Haddock comes, eats and go. So he will have to pay back 100 rupees, correct? And we are going to the market every day buying 80. So we will have to pay them 80 rupees. So what is happening? We are having 20 rupees profit as per the books, accounting books. But in cash, we are not having any money at all. Correct? So the transaction has happened. The person has come, eat and go, and you had gone, bought and come back, and you are cooked, and you are also earning a profit. But you are none of these transactions are happening in money. So as per your accounting books, every day you are earning 20 rupees profit, but in cash you are recognizing this only on the third day, correct? So every third day you are getting 60 rupees. So this is the accounting book and that's the cash book. And this is the reason behind accounts, where every transaction gets recorded based on the events which they occur. And cash book will take only the cash inflow and outflow. Okay, now what else you can do? One is, if you don't get income on time, you can probably delay your payment mechanism, correct? Every day if Haddock had paid you, it is easy for you to pay for your expenses also. But if Haddock is paying only third day, you have no other go, because you will have to adjust your payments also because you don't have money. So you can probably make the payments on the third day. But what if the vendor, the supplier from whom you are buying the vegetables and flowers, insist every day you should make the payment? I am not accepting payment on the third day. Now what will happen? Your net cash positive or negative, it will always be negative, correct? On day 1 and day 2, you'll have to adjust your transactions. How will you adjust? We already learned a concept called borrowing, correct? So if you don't have something, you go and ask your friend. What did Krishna do? Krishna, if he didn't have a pen, he asked Beam for a pen and he again gave it back, correct? Now what you can do in the same situation here, where there is a negative cash balance, you can get money from someone for day 1 and day 2 and pay them back, correct? First day you get 80 rupees, second day again you get 80 rupees. What will happen? Accumulated 160 rupees will be there. So you will be making the payment back to the respective person from whom you are getting the money. And similarly, again, day 4 and day 5, you won't get any income, but you will have to make the payment. So what you do? You take a loan. So this is called short-term loan. Okay. So for everyday's business transactions, you do something like what Krishna does for a pen in terms of money, and that is called short-term loan. Okay. Now let's go to next illustration. Now Tintin wants to earn 30 rupees profit and plans to sell at rupees 110. But Captain Haddock says 110 is too much. I am not ready to pay more than 100 rupees. And for Tintin, Haddock is the only customer. Now, what will Tintin do? So he cannot negotiate on the selling price because Haddock is saying it's going to be just 100 rupees, not more than that. But Tintin wants 30 rupees for him to survive, right? Now, what should be the total cost? The cost cannot be 80, right? So can any of you guess, answer this question? What should be the total cost? I getting any answers?
One has answered 70.
Yeah, great. So how do you calculate 100 minus 30? So the total cost is going to be 70. Now, how do you adjust these numbers? You go back, bargain with the vegetable and flour supplier, ask him to reduce the material from which for which they had earlier paid 50 rupees. Now, what you can probably do, sir, please, I can pay you only 45. Why? Because your customer, Haddock, is saying he will pay you only 100, right? So, you are putting the same pressure on the person from whom you are buying as well, right? So, what will you do if someone comes and says you that I'm giving you only so much? You'll reflect the same pressure with your next person on whom you can order or dictate terms, correct? So now what Tintin can do in order to maintain a cost at 70, he can go back to the flow shop. He can ask these people to reduce the money from 50 to 45. Similarly, he can go back to the chef, the cooks, right? He can ask them to reduce their cost from 15 to 10, right? So if he can reduce successfully by 10 rupees, he can still continue to sell at 100 rupees and he can continue to make a profit of 30, right? So what is the essence of this learning? Basically, if the sales price is fixed and if you desperately need the same profit in order to survive, you need to optimize the cost. Cost optimization will again help you to improve your profits. Always we should try to maintain the best possible cost so that you operate in a profitable position. Okay, fine. The next thing, now Captain Haddock begs Tintin. He's in a very tough position and he wants to reduce the cost desperately in every possible way. And he's begging Tintin to charge him the lowest possible cost. How much should Tintin charge them? Can you guys answer? How much should Tintin charge? Has someone answered?
We are waiting for an answer.
Okay.
Uh, Pradyuman has answered 90 or 80.
How much?
One answer is 80.
Okay.
Preetham has answered 90.
Okay. Okay. So now, what is the point which Haddock is trying to say? He's begging. He's not having money at all, and he cannot afford to pay more. But Tintin is also doing his own business, right? So now Tintin cannot incur a loss for selling everything to Haddock. At any point of time, Tintin is incurring 80 rupees as a cost here, correct? He has to pay raw material, salary, other expense, right? So the total cost is coming to 80 rupees. What is the maximum thing Tintin can reduce? He can nullify his profit. Probably he can just earn 0 rupees, right? Instead of making 30 rupees or 20 rupees or 10 rupees profit, he can just sell it at the same cost without making any money for himself. That's the maximum thing which Tintin can do, correct, to help Haddock. So at what price he can sell? He can minimum sell at 80 rupees where there is no profit and there is no loss. Let's say, let's repeat the same example with different numbers. Now, if the raw material price is 45, salary is 10, and other expenses is 15. This is the another illustration which we saw, right? So the total cost now comes to 70. In this case, he can probably sell at 70 because that is the lowest price at which Tintin can sell it to Haddock, right? And this concept is called break-even point, where there is no profit and there is no loss. So you're just selling at whatever cost you are getting and whatever revenue which You just recognize. So let's go to the next illustration. So reinvest the profits. So what did we learn in the earlier concept, where whenever you get something, you just reinvest your profits, right? So that your wealth gets maximized. So when you uh, maximize your wealth, at the same time, what is something which you need to remember? You should not just put all the eggs in one basket, right? You need to diversify your risk. What can happen if you just put all your money only in your business, and all of a sudden if your business closes, that's all your money is lost. So how you can diversify your risk? You can probably go and invest in your government bond. Why government bond is very safe. It's expected that the governments doesn't easily crash, right? So what happens if there is a very less risk? There is a very less return. So there is very less risk, so you earn very less return. Probably what else you can do? You can go to the bank and put fixed deposit with the available money, right? But what happens there? That's an average risk, and you get an average return, right? What is the other thing which you can probably do? You can go and put it in the share market, or you can probably put in your own business. What can probably happen? It's very high risk, correct? So either you can earn a lot of money, or probably you might lose all your money, right? So you should always ensure that you diversify your risk when you reinvest your profits. Now let's just, whatever points which you have noted down till illustration 8, all these things, as an accountant will provide you in the form of profit and loss account, in the form of balance sheet, right? So what happens, from where you will take all these numbers? So there is the sales. So this is a format in which you will be presented by the accountant. What he does, he records all the data and he will provide you in a structured format, for which will be helpful for you to do an analysis, right? So it will capture all the sales whatever you did, and then it will capture all the expenditures: purchase, salary, rent, electricity, all the expenses. And the net of this will help you to understand what is your profit or what is your loss. And in the balance sheet will capture the equity. Do you remember the equity concept we discussed? It is the share in the business ownership, right? And what is the retained earnings? Retained earnings is the accumulated earnings. Every day you keep earning a profit, right? So let's assume every year, throughout the year you keep earning profit, and next year it becomes a retained earning, where you have not invested your retained earnings. I'm sorry, where you have just accumulated all your profits. That number will be shown as a retained earning. Okay. Then what is long-term loan? Long-term loan is the loan which you will have to repay for after a long time frame. So you get money for buying the restaurant. Tintin wanted 10,000 rupees, right? So of that 5,000 rupees, if he's raising it as long-term loan, he will be paying back the same money after few years, more than a year, basically. What is short-term loan? We discussed net, working capital loan, right? Where every day, if Captain Haddock is not paying the money, you'll have to still incur cost for buying the product, right? So what will you do? You'll go and get loan from the bank, which is a short-term net working capital loan. You go take the money, that will come in short-term loan. Then what else can be? The expense payable, right? So if Haddock is not paying, what you will do? You will also go and try to bargain with the supplier. You will say, supplier, I will not pay you now, I will pay you later. What will happen? That will get recorded in the expenses payable. Now, the other side, which is asset. What is the fixed asset that we are talking about? It is the restaurant building which Tintin wanted to buy, right? So Tintin wanted to buy 10,000 rupees restaurant. So that is a fixed asset. Why it is a fixed asset? It's a building which is going to withstand for a long time frame. And what are all the things which forms part of fixed assets? It will be land, building, furniture, equipments. So all these over a certain value, everything will form part of your assets. And then you go to the investments. What is your investment? Do you remember what we discussed on the investments? So you have accumulated profit in your hand. For example, Tintin had 5,000 rupees in his savings. He did not invest anywhere, right? So if he invests in his same company, that is different. What if he wants to invest in a government bond? What if he wants to put a fixed deposit in a bank? Because he doesn't want to take much risk. He wants to leverage his risk, right? So he want to diversify his risk into multiple baskets. Now all these numbers will come under investments. Then income receivable. What is income receivable? Captain Haddock came, had food, he didn't pay, he just went back. He said he will only pay on the third day. So the first 2 days amounts will be shown as income receivable. 80 rupees on the first day, second day 160 rupees. That is the income receivable for you, right? And then inventory or raw material. This is nothing but your stock. What is your stock? Can someone say what is inventory or your raw material? Can you put it in the chat? Has anyone answered?
Again, Pradyuman has answered vegetable, etc.
Exactly. So whatever materials that you buy for the purpose of production, so all these materials comes as a part of your inventory and raw material. In our case, it is the vegetables, right? Vegetables, flowers, etc. Good. Then what is the cash balance? Cash balance is the money which has not been put to use for rest of the things will be available in your cash in hand, correct? What was Tintin doing? Do you remember? He was having 5,000 rupees in cash without using it, right? He was just keeping it idle. So that is your cash balance. So what are the key takeaways? The key objective in business is to maximize profit, maximize the investor wealth, and ensure long-term survival, right? And profits can be maximized through, how do you maximize your profits? It can be done by price fixation. You can either increase your price for the material, whatever material it might be, which you are selling, or you can increase your profit margin. How do you increase your profit margin? Probably by optimizing the cost, right? So try to maintain the cost as low as possible. If you reduce the cost, automatically the margin increases, right? Then wealth can be maximized through business expansion, by reinvesting your profits, and by carefully planning the funding strategies, right? What is the funding strategy we discuss? That whether you take the money in form of debt or in form of equity. You remember the Krishna and Balram example, right? And pecking order theory. What is the pecking order theory? You use your own money. So Tintin had 5,000 rupees in his hand. First, he will put that money for the purpose of his business. Then he will go and borrow, right? So that's the next step which he can probably do. And only then, only as a last resort, you will go and sell your equity, correct? So you will never want to share your own pen with someone, correct? So what will happen if Krishna and Balram both keep fighting for the same pen, correct? Because both of them are the owners of the pen, right? When will you do that? Only as a last resort, because one day Krishna didn't have an option at all. He had to submit his assignments on that day. So he had no other go. So he went and bought the pen, right? So that is the last resort where you can go for the equity. Then day-to-day operation cash flows can be managed efficiently by managing receivables, payables, and short-term loan. What is this concept? Remember, where Haddock has not done the payment for whatever food that he ate, but you are making the payment to the vendor. What will you do? You will probably go and take a short-term loan. Similarly, if Haddock has not continues not to make the payment, you will also go try fight with the vendor, reduce his bill. So do you remember we went and reduced the money from 50 to 45, and we also went and reduced the chef's salary, Motu Patlu's salary from 15 to 10, right? Thereby handling the cash flow cycle. So how we can handle the business? You need to manage your receivables and payables efficiently, right? Then companies should strive to earn at least the break-even point in order to survive, right? So remember what is the minimum amount at which Tintin can sell to Haddock. Even Haddock's toughest time, Tintin was in a position to sell at his cost, right? The maximum thing I can do is I can say, okay, I will not take any profits at all. So I am selling it at the cost, right? That's the way in which the break-even point works. And what was the last concept that we learned? Diversify investment based on your risk. So if it is very highly risky, your own business or probably the share market, then reduce the risk by putting only certain amount in it. So always remember not to put all the eggs in the same basket. Put it in different baskets so that at least few of the baskets will survive even at the worst point of time. So I have a self-assessment test for you guys. You need to do and share it with me. So basically, whatever concepts that we discussed today, all these key takeaways, I'm sure all you guys wanted to become entrepreneurs and you have your own ideas. So reflect all these thought process in your own business ideas and write a two-page write-up and share it with me. You are welcome to share it with me, or you can just write a two-page write-up and try to understand it better. Right. So if you have any doubts and you want to get further understandings in any of these concepts, you are welcome. Okay. Is there any questions or doubts which want me to answer? You can go on. So now it's a Q&A.
Thank you, Karthik, for explaining all these finance concepts in such entertaining way. I'm sure the students would relate with all the cartoon characters, and I hope that they get a fair bit of understanding of how the uh, finance works, and they are able to apply these concepts in their projects or whatever ventures they are planning to go ahead with. So let's see if there are any questions. Just wait for a minute or so.
Yeah, sure.
Yeah, I think there are no questions.
Fine. So I'll
Okay.
just close it up. Best wishes. If you have any doubts in this session, you can reach out to me. And this is my mail ID, akarthik, akarthik @outlook.com. You can reach out to me or write out to me if you have any doubts or any support. And you can connect out through LinkedIn. Thank you.
Thank you, Karthik. Thank you for the lovely session. Thank you, everyone, for joining us, and all the best for your assignments and projects for Tinkerpreneur 2022. Thank you.
Thank you, Pratik.